Hey, Kevin here, Top 100 Financial Advisor, two-time author, one-time bestseller, and we're here to talk about the stock market. Today, I want to give you 7 stocks that are poised to do well for Black Friday. Now, obviously, you want to, if you're looking to kind of get in something now that you think is going to do good for Black Friday, you might want to do early in October. It's also why when we talked about my watch list that I put out every quarter, I adjusted for that on October 1. Again, you don't want to come late to the party and invest on like the Thursday before. It doesn't really work like that. And you certainly don't want to jump in after the fact. Now, in general, you obviously want to evaluate each of these 7 stocks, see what works best for you. I'm getting this list from Yahoo Finance, but there are 2 stocks on the list, really 3, that I really like, 2 of which we've talked about before. One is relatively new, but it meets my personal criteria. Now, if you're already inside the Investor's Toolkit, you know what criteria I'm talking about. I would highly urge you to look into that. We'll also talk about that in a few. I'll also kind of look back and forth from the camera to my computer because I need to make sure that I'm reading the list off correctly. So it'll be a little awkward transition there, but I do want to show you that we may share the screen depending on how that will work as well. All right, so let's go ahead. Let's dig into the list. I'll talk about why they think some of these are great and then why I think some of these are great as well. And there's one on here that is surprising, at least surprising to me. All right, so let's go ahead and pull it up right quick. And here we go. All right, the 7, they are Amazon, Target, Walmart, Ulta Beauty Products, Gap. Yes, Gap. Gap is up like 10 or 15% over the past like month or so. Did not think that would have been Gap, but it is. And then you've got American Eagle, which I didn't know was public. I haven't touched American Eagle or been inside of American Eagle since like, I don't know, freshman year of high school. So we're talking like 2004, 2005, maybe. But apparently they are poised to do well for Black Friday. And then you've got Lululemon. I don't know how to pronounce it. I'm going to stick with Lululemon because it's easiest for me. So those are the 7. And basically the premise behind this, you know that people are going to shop on Amazon. They already had their Amazon Prime Day. I bought a lot of stuff, which, did I need it? Some of it, yes. Other stuff is like, oh my God, these shoes are cheap, so I might as well get them. But aside from that, we know people are going to buy from Amazon. We know people are buying from Walmart right now. So those are my first 2 that I like from this list. And now I'll kind of go through how they're all doing. But obviously, you guys know, if you follow me on public, I've been on Amazon for quite a while now. I invested in Walmart for my wife 6 years ago now, 5 or 6 years ago now, and it's done incredibly well. But especially during the pandemic, that they tend to do well. But it's also why back in October, I switched out on my watch list. I switched out Kroger for Walmart because I expected people to buy more things from Walmart than Kroger during the 4th quarter, which includes Black Friday. Why is that the case? Well, they sell electronics and Kroger does not. They sell a bunch of other stuff, clothing. Walmart sells everything, right? But that is a better pick, in my view, from what we expect, is a better pick than what Kroger would do. Yes, Kroger can still make you money, but I think Walmart can do just a tiny bit more. And that's what we're looking for, or at least what I'm looking for in switching from Kroger to Walmart in terms of that quarterly watch list. If you haven't seen the quarterly watch list, you want to go back and check that out. I think we did that video about 2.5 weeks ago. So check for like October 1st or so on YouTube, on Instagram, and on Facebook. And you should be able to find that, as well as the reasoning as to why we had those. Again, Amazon, for obvious and clear reasons, I think they are up. Let me check here. Over the past month, Amazon is up 10% just in the past month. Over the entire year of this year in 2020, they are up 77%, which is the highest out of this group for clearly obvious reasons. Now, this list, again, is pulled from Yahoo Finance. The reason why they see that, or they think rather, that these 7 are going to do well is because people's buying habits, they feel, is going to shift a bit because we're still at home. People are working from home. And in some cases, people are working from home permanently because companies are like, look, why am I paying millions of dollars for this building when y'all are fine at your house? You don't have to commute. I don't have to buy you guys coffee. Y'all can just stay at home and work, and I'm good. And they get to save that extra money. The reason why it's the case is so like stuff like Lululemon, which is athleisure, and you've got Gap. So people are investing in more comfortable clothes, basically. Now, what I call American Eagle comfortable clothes, I don't know. I haven't worn it, like I said, since like freshman year. So I'm not totally sure. But that is the premise behind it. So more towards clothing. Amazon's got all that stuff. So does Walmart have all that stuff. Target is on here too. I don't know if I mentioned that as well, but they got fancy stuff at Target. So if of the clothing stores here, I'm probably more apt to shop at Target and Amazon than I am American Eagle, Gap, and clearly I don't shop at Ulta, but that's there too. I've been told, I've heard in the past that Ulta tends to do pretty well, but I do want to give you a look at how well they've done over the past year and then over the past month. So again, we're looking towards Black Friday. In my view, if I were to buy any of these, I already have Walmart, I already have Amazon, I'm holding those, and you guys know my process. But if I'm looking into it, what I might do if I were in your shoes, I would likely, if I'm buying it now, again, do your research. You want to make sure they fit for you. I would do my research, see which one I would probably buy sometime soon, and probably hold until some point in January. The reason why I would do that is because you're still going to get New Year's Day sales. If you did well at Black Friday, you're probably going to do well up until like mid-January. Doesn't mean you're going to fall off either, but you just want to do that. I wouldn't just jump in and then the day after Black Friday sell. You normally kind of want to get that data point for them to say, oh my God, we had 1,500% jump or whatever it is, and that's when you really start to see that gain. But I would, if you're looking to do it, I would consider doing it soon and holding through right like mid-January or so, or at least to the end of December. But again, do your research. I'm not telling you just jump in there blindly. You don't want to do that. You want to check out the Investors Toolkit. That link will be above. I can show you how to research and how to save yourself from doing something that can be harmful to you and your finances. So you'll make sure you check that out. All right, so let's go here one more time. So over the past year, so from January 1 to right now, October 19th, we've got Amazon at 77%. You then have Lululemon at 51%. And that's my next pick. Lululemon has done pretty well. And I don't know how long they've been around. I am not familiar. It's not a company I follow. So I'm putting all those caveats out there. But if I had to pick another one, I would go with Lululemon based on what we know now. Then you've got Target at 28%, which is good. Then you've got Walmart at 21%. Then the stock market as a whole right now is up 8%. So anything above 8 is good. And we've got 4 of those that are above that mark, which is astounding. 77%, 51%, 28%, and 21%. And that was Amazon, Lululemon, Target, and Walmart. So 2 of the 7 already have. All right. So we go from there, and then we've got, which one is this? We've got Gap up 8% this year, which is right around where the market is, which again is a little surprising because I thought Gap went out of business, to be honest with you. Apparently they're not. So we got Gap there, and then we've got American Eagle at just 2%, which is not encouraging. I mean, now it's better than your bank account. It's 3 or 4 times better than your bank account. I will give you that. But when I can get 50% in Lululemon, or even conservatively more 21% for Walmart, why would I go for American Eagle? So again, it's not something I followed for years. I'm not sure. We can pull it back and look at that. And then we said American Eagle, and then we've got Ulta at negative 4.4%. So that's actually interesting. I would have thought that Ulta was higher than that, but this is why. This is why you check and you do your research before you jump into something, because I definitely thought Ulta would have been higher up there, and it's not. So you want to definitely check those things. So I'm going to pull it back real quick, and you guys cannot see the screen. I'm doing that on purpose. It's just a bunch of lines right now. So I'm going to pull it back. I just want to see how they've done over the past 5 years. I'm curious. I am probably sure that Amazon's going to be at the top. But again, this is why you check, this is why you do research. And we see that Lululemon is actually at the top at 550% over the past 5 years. So perhaps I will look into it. The reason why I'm not going to jump into Lulu now, and the stock symbol is Lulu, Lulu, is because I missed it. My process is I do it every 6 months. It should have popped up on my radar sooner. It just didn't. So I'm very interested in it right now. So will I break that rule? Probably not. because I like to stick to the rules. But it is interesting. And we've got Amazon at 473, and then you have a huge gap. So from there, for 473 at Amazon, you're going down to 145, which is still great. 145 for Walmart and 119 for Target. The stock market as a whole is up 71%. Everything else is under that. The worst stock out of these is Gap at negative 28% and American Eagle at negative 5%. So over the past 5 years, American Eagle hasn't been great. Over the past year, American Eagle's only gotten you 1%. So just based on this, based on what we see right now, there are a bunch of other things you want to kind of check the box and look at. American Eagle is probably not going to be it for me. I'm more leaning towards a Lululemon. I'm leaning more towards an Amazon, which we already have. I'm leaning more towards a Walmart, which you already have. And it's like, there's like the whole buy low, sell now, kind of like, when do I jump into it? Again, my thing is, the earlier you're into it, the better off you're going to be. If you've been following me on any of these channels, you know that I've been talking about like the big three when it comes to consumer goods, if you will. Costco, Walmart, or really four: Costco, Walmart, Dollar General, Kroger. Been preaching it, been saying it, been sending on emails for months now. So if you had gotten it, especially a Walmart in this case, if you had gotten Walmart back in March, April, May, it was cheaper then than what it is now. And assuming that things are going to continue the way that they have, which is absolutely unpredictable, but if it does, getting in October, it'll be cheaper in October than what we think it'll be in November, December, January, February. So that is how things should work. Doesn't mean that it will this time around. All right, so that is it for me today. I want to encourage you to check out the Investors Toolkit. You can go to buildingbread.com/tools, and I'm pulling it up here so I can actually share the screen with you, and you should be able to see this. So give me one quick second as we rotate. And again, we're testing out new formats, trying to get better, trying to upgrade. So we got the site upgraded earlier this year. We're trying to get the video upgraded. So got some stuff. I'm gonna see about the background. I've been testing rooms, my son's room actually. That's why you see all the colorful stuff. All right, so you should be able to see the Investors Toolkit in the background. But again, this is the Investors Toolkit. You really want to check this out because I show you every single thing you need, step by step by step. And most importantly, I help protect you from bad investment decisions and the mistakes that the vast majority of investors do. The election is coming up. You really want to avoid the mistakes that most people are going to make around this time. I saw this around 2016. We made terrible investment decisions. And when the market went up, which is not what they expected it to do, they lost out and stayed out of the market until like 2017 and missed out on the entire run. You don't get that money back. You don't want to miss out on that opportunity, which is, again, why you want to check out the Investors Toolkit. If you use the promo code Generational2020, you can save $200 right now. That makes your first payment, if you do the payment plan, that makes your first payment $197. So it's extremely affordable. You break it down into 3 payments and you can take it now. I would highly suggest it. We've got a bunch of great reviews. People are here all the time that comment on it. So you want to make sure that you do that and make sure that you share the video. Again, we know that Black Friday is coming around the corner. There are going to be some people that are spending money, which is great. Holiday season. I enjoy holiday season. You want to do it in the right proportions. But again, you can also make some money around this time. And right now in October, it's the time to think about that. The sooner the better. So you had that missed your opportunity, but you want to make sure you hop on it now. And the Investors Toolkit is one of those ways to do it. All right, so that is it for me. I will talk to y'all later. And tomorrow, we'll see what happens. We also got some earnings stuff we'll talk about here pretty soon, too. All right, that's it for me. I'll see you guys later.